The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi folks, Basil Chapman here. This is the Tiger Technicians Hour, and we're looking at the Dow down 160 at 38,740. So this is Technical Friday. I want to do some things here that take a little time in discussing, and I'm going to be doing this tonight when I do my overview that I do on the weekends. Usually I do it Saturday. I want to get it done if I can tonight, straight after the bell this afternoon. My overview video for subscribers to my opening call. I want to do it in preparation for Tuesday's webinar that is going to be right here. Let me drag this across. We're looking at the opening call subscriber webinar Tuesday, March the 19th at 4 p.m. The technical tools needed for the coming few months. Opening call newsletter by Basil Chapman. So what I'm going to be doing is I'm going to be talking about this critical 914 moving average because I suspect that we are getting really close to where it turns down. But so what's the big deal? So it turns down, goes from green to pink. Well, it hasn't been pink for a long time, and that's my technical tool of last resort. That's the last indicator that usually gives the signal, and this particular instance hasn't turned down yet, but it's very close. That's the daily chart. I'm going to be talking about that. What are the implications? What happens next? What are we looking for if there is a turn down? What's the big deal? It could turn down and then all of a sudden it could suddenly spring to the upside. Well, that's what we'll be talking about and what we're looking for. What clues, what technical tools will help us? Then I'll be talking about the weekly charts. Why? In the Chapman methodology, we always expect that a buy signal that's upgraded to a buy mode, which the weekly charts of all the indices are, they're in buy modes. What's the implication? So what? Does it go to a D? Does it go E, F, G? What does it do? That's what I'll be talking about and what to look for. I'll be talking about what stocks are really important. What are we looking at? I had a question right now that's just come in. I want to deal with it immediately. And that is, so let me just move to this side. MJ has had a very nice move to the upside. It was looking lousy for a couple of days. It looked quite good 3 days ago with a green candle, but then yesterday was a red candle. Then today it's had a big spike to the upside. So MJ is the alternate harvest cannabis sector, and the MSOS is the U.S. only cannabis sector, and that's called Advisor Shares Pure U.S. Cannabis. That's gapped up and holding the gap so far, and actually had a much better. I looked at this and I thought, that's a good candle. Then I completely forgot about it. So I got the message saying, what do we do? So we had this for a while, the MJ, and then I said, no, I don't like the action. So we're out and we're waiting for something else. Now, what happens especially in the cannabis sector is that there are all of these little rumors and stories about Fed and banking and all this stuff that's really important. Mostly what's important is you want to get the politicians behind whatever the moves are so that it gains the availability is one thing, but it's also the cash. It's also the competition that's out there. So I think it's quite complex. But what I am going to say for this particular question, what do we do? Just for me at this point, I'm just holding off a little longer before we do anything. I might come back into it. And if I do, I suspect that I prefer just to go to the United States advisor shares. I think that's the way to go. You can have a little bit of each, but I would do this. I don't trust this move right now, but I am starting to see, even here in Massachusetts, in the Boston Globe, I was reading the other day about certain things that are happening that the administration is trying to help the industry. That's really what you want, right, for any industry. So I'm going to suggest take a small position. You can choose whether it's the MJ, alternate harvest at 326. Don't consider price. Consider the pattern. Look at the middle chart, the weekly chart. The monthly charts are horrible. The weekly charts improve. Look at the week one, and the one in the middle right here. It's gone to a peak C and it's pulled back, and the 9-period moving average is still good. Now look at this one, MSOS. And you can see it's the same pattern, but the trajectory is, it's a much stronger move, and the move above that peak A, which, I need to show you this. So this is your starting point right here. So I like to do this. I do the arrow, and then just to help people who are not used to this particular technique, that's every peak above that has to be counted. So you get your peak A right there. Then you get a pullback. That becomes an A. I didn't type it in. But it makes a low. As long as it doesn't take out the starting point, that is an A. That is an A. That then becomes a B. It should be a B above that. No, this is your B, because every single peak above it, that becomes a B, and that becomes a C. So the C is still holding very nicely with a 9 over the 14. So I'm going to suggest start a position. You asked me about it. For subscribers, I'm holding off maybe the rest of the day. I'll do some work over the weekend. You could start your position now, but until you break this Chapman Wave inside track repellent line and you actually start your trade in the 9s. If you trade in the 9s, I'm going to say there's a really good chance you're going to make a leg D in the 10.8. Double top at 1064. 1065 will start a leg D. And then that monthly chart finally will start to improve. So that's what I'm saying. Where would you put a stop in? I'd say for this one at 839, just for the moment, make it kind of wide, make it like $1. That's not what I'd normally want to do, but just, you got to give it a little room, right? I want to see if it fills the gap. If it doesn't fill the gap, and Monday it's already trading above today's high of 869, it's going to the 878 area. Whew, that's exactly what you want to see. That'll be very good. So that's what I'm saying. And if you want to choose, that's MJ. This is the one I'm talking about is MSOS. MJ trading right now at 329. Yep, this one is a little harder because it's a big percentage move. But at 330, as I'm speaking, I would give it, you got to give it a decent bit of room. I'd say to 316. Just starts. Once it starts to rally, then we can make adjustments and all sorts of things. Hope that helps you, Kevin. Okay. Next thing we're looking at, I wanted to go through, so what do we do? Time is 10:30. I want to finish the section by going through all the indices. So we're looking at, I'll do this one more time. The Dow pulling back is now down 110. It's a little bit better than it was. I mean, really, this is not very bearish action at all when you think about it. But I'm waiting to see that 9-period moving average taken out and this uptrend support line right there. So 38,801 right now. I would say by Monday or Tuesday, if you start to trade under 38,600, now you start to accelerate to the downside. Right now, if you look at the E-mini, you're ready for a bounce. Look. Yeah, you're ready. Peak A, peak B, leg C, a bounce. But the 5-minute chart is saying, wow, it's going to need more than a bounce to get that pink 9-period moving average above the 14 to turn green. But yeah, that's a D. It's an E, a tough E that we're looking at potential in the 10-minute chart. All right, let's get back. As soon as we return, I've got some questions I want to get to. Yes, we'll look at Apple, and we'll look at some of the Mag 7s.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Attention all opening call subscribers. Next Tuesday, March 19th, Basil Chapman will be hosting a live 90-minute webinar for all subscribers. From 4 to 5:30 p.m., Basil will take subscribers through an educative journey, giving insight into how he will approach this volatile market. Basil Chapman's opening call newsletter has a 30-day money-back guarantee for all first-time subscribers, and all subscribers get access to his trove of webinar archives, so you have nothing to lose. Go to the newsletters tab of TFNN.com and sign up today. We'll see you March 19th. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. So I had a question in the den about AV and AVTR trading at 25.33, up 5 cents. Aventor Inc. I don't know what they do. I wonder if it's to do with anything aeronautical. I have no idea. It was once in the 44 area. It's come down to the 17s. Now it's trading 25, actually down to the 16s. So the monthly chart made that peak D. Remember, peak D is where other things can happen. Pulls back sharply, comes back down, and now it's got a leg A in the monthly chart, a gray A, because the MACD is good, but the stochastic's only at 77%. I'd like it to be at 80% to give it a buy signal right there. Okay, the weekly chart has gone to peak A. What I'm doing is from this bottom, I'm notating each peak. A, B, whoops, not a V, but a B, and a C. It's in leg C right now, and it's made a peak D, second peak D in the daily chart. So the question was, hi Basil, AVTR, it looks like a peak E. Oops, peak E. Oh, I know what you've done. Let me just check. So, thank you. That's your A. I did it a little too quickly. There's every peak. That's your obligation, Chapman Wave, is to always make sure you're counting the peaks because you want to get to the D to be able to do a proper assessment. D, and that's an E. Yeah, I've got a slightly different. I'm not sure what you did. Follow what I've done. I don't know if you did the same as I did. I almost missed this little peak right there. That was on the low was the 17th at 21.25 with a high of 21.78, and the next of the high was 21.82, and then it pulled back but held the left side low. So it's A, B, C, D, E, pulls back sharply. Brand new F, or this is an E, an A. You got an alternate count there, but that's my starting point at the 200-period moving average. So under that becomes another A. then a B, a gray B, and then a C because it's overlapping that A, and now I've got a D. So, yeah, I've got a D. And you've got yourself, this is the pattern that I'm looking at. Remember, we're always looking at patterns. So you've got a little flag pattern right here. Flag pattern. And another thing here, right here. So, as it stands right now, it's holding very nice. And you said, what did you say? Did I? Oh, let me see. Get out of there. Ooh, I've got a lot going on. There are. Yes, it looks like Pink E are now pulling back, and I'm looking at 24.60 area for a long position. Your thoughts, please. Thank you, and happy Friday. Yeah, happy Friday to you, dude. Now, what we're looking at is, dude is the name of our dinner. It's holding so well. I mean, there's nothing wrong with this. The 9 is way above the 14. To get that 9 to cross negative, you'd probably have to see a move into the 24.45 area, and you said 24.60-ish is where you want to get a long position. So this is what I would look at. I don't want to change your thinking because you've done your homework, and that's what you're looking for. So the weekly chart is held so well. It's nice, pushing nicely above the 200-period moving average. The 9 is just about to cross the 200. That'll be a big deal when it does that. The 9 is over the 40. All of this is really positive. I don't know what they do. Aventor, I'll just do this real quickly. I think I typed it incorrectly. It's so far away I can barely see it. Let's see. Aventor Inc. does. The company provides, Aventor Inc. provides clinical services including custom kiting solutions, clinical trial equipment, ancillary services. Aventor also provides procurement and sourcing services, lab equipment services, digital solutions, downstream optimization services. Oh, okay. So, they restructuring to 2 new businesses, laboratory solutions and bioscience production. This is a very nice company. It was once in the 44s. I got more than cut in half, and it's coming back. Yes, I like this very much. Shorter term, I like it. Intermediate term, the monthly chart needs a lot of work. It needs to close, probably have 1 month in the next 3 months, 1 month that closes above 29. And then I'll say, wow, it's coming back nicely. So I like it. I'm going to suggest to you that you stick with your plan, but I would also like to revisit it Monday or Tuesday. I'd like to see where it closes today, probably Tuesday. So I'm going to put that down here, AVTR. I concur with everything you're doing there. I'll put Tuesday. That's the day of my webinar. It'll be a good day to look at it. Yes, I like it. I hope I got it right. Aventor. Okay. Nothing to see here that's negative. This is very good. So that's fine. Now, what I want you to do is this. I've written it down there. So let me see what I wrote down. So the question came in yesterday, and I said I'd look at it again to see how it closed. Tesla. Where would I be looking at starting a position in Tesla? At this particular point with the market conditions as they are, I'm just going to suggest hold off on Tesla. What you really want to see is the 200-period moving average in the weekly chart, which is at 200. You want to see look, this is middle of March. I would say by the end of April, if Tesla is trading under 150, I'm talking now about 6 weeks. 150 is nothing the way it's going to the downside. But I'm saying in 6 weeks' time, even if it's dipped under 150, if it's come back and it's starting to trade in the 190s, getting close to the 200-period moving average, I would say that whatever was very negative, and there's a recent big pullback, which has gone on for quite a few months, is starting to resolve. And if the market has come back strongly late April, and Tesla is actually going in with the flow, I'd say that's a good sign. And I'm talking about it not even as Tesla as a company. I'm talking about just Tesla as a stock. And the reason why I'm kind of a little hesitant to talk about it in terms of anything but a short-term trade to the upside is that the power of the 9-period moving average in the weekly chart being so negative and splashing, this is the exact opposite of what we were looking at in AVTR, where the 9-period moving average was just about to push above the 200-period moving average. But there's a weekly chart, and the 9's gone sharply underneath the 200-period moving average. And it just says to me that I don't see enough energy in Tesla to really take it as an intermediate term. And I think, Jason, that's what you were looking at. Short term, I can see trades. All right, got that out the way. Now I wanted to go through this. GDX. The GDX, green candle today, up 10 cents at 29.99. Most importantly, it's made a peak C. And what happens is, remember, I talk about this. The reason I'll let me put this in my notes here. GDX squash. This is called the Chapman wave squash. Why? You see the MACD over there? You see the way I always put the stochastic under it? Every once in a while, you get a spectacular move to the upside. And the stochastic goes from 20% or under to over 80%, and the MACD expands its histogram. That takes you quickly to a C, and then it takes a little longer for the momentum to go to a leg D.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstat's Tiger Forex Report. Teddy Kegstat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of Basil's educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi, folks, we're back, and we're looking at, as I say, the GDX is holding very well. So remember, this is what I call the squash, where the stochastic rallies sharply with the price, must be with the price. And the MACD has a big expansion of that 9-period differential and the 26. So the aperture just expands, and that just takes you really quickly to a peak A, then a B, and then a C. And then what happens is it takes a little bit longer because you've handed the torque of the stochastic. I used to have a lot of discussion with late Dave White about this. The torque of the stochastic gets handed to the momentum of the MACD. How the MACD handles it after that is really important, but it's important that the 9-period moving average, look, 9 went over the gold 200-period moving average, and the 14 is about to tackle the 200. That's all very important. But you haven't yet taken out Chapman Wave Inside Track repellent zone in the weekly chart. So when eventually, it will happen, but when eventually you're looking at leg D, finally this leg D from that peak C, the Chapman Wave 2-bar reversal right there. Ooh, it's a little slow. At 32.33, the high of the week of the 22nd of December, when that's taken out, that's going to be really important. That's going to help the monthly chart. So, we've got a little ping, and a little ping says, I'm going to my engineer. We've got Brent in Martinez. Brent, how are you?
Oh, I'm doing quite well, Basil. How are you?
I'm well, thank you. So you'd
nice
like
to
look
speak with you
at?
again.
Yeah, nice to speak with you. I hope you're well and the family's good.
Yes, all is good. Thank you so much for asking.
Okay, so you'd like to look at?
It's a Novix. That's one you had in your newsletter at one point, and
Right.
It's not in there anymore. But what I was noticing, I'd like you to take a look at it because you're, of course, way better out than I am. But time price match, if you take the midpoint, it shows up. I'm looking at a weekly chart, so
Yes.
you have to go back to the beginning of the year of 2023. It's
So
either
let me
end
just-
of 2022 or beginning of 2023. I've had this on other
So
charts right on that line.
the 650 low of January of 2023.
Yeah, and then you go to the midpoints in July of 2023. So it's equal of about between 7 and 8 months from that midpoint either direction. Just want to get your thoughts on it.
Okay, so what I do, let's just make this a lesson since we're talking about Chapman Wave Technical Friday. What I would do is, let's just say I'm looking at this and I moved it over so I can't see what happened after about November. And I've moved the weekly chart. And I drew in this up channel support level, which it took out. And I'm looking at it, and now we can even make it October. What I would normally do is I take this left side of 650, the week of the 6th of January, $6.50. I draw it to the right, just drag it over, and I'd go to the high that was made at 23.90 the week of the 28th of July, and then I'd click and I'd say that would be my left side, right side price time match. But because it's stretched out a little bit, I'd do two things. I'd click it once, but then I would use the trough, the little doji candle trough of the week of the 25th, and say, that's probably going to be the one that I have to use. So let me say, I just wanted to show you what I'm looking at and why I'm looking at it. So I'm going to draw the vertical line. This is the plumb line, folks. This is what we call the plumb line. We're expecting the number of bars from the $6.50 low of January, the week of January the 6th, going to the high of the week of the 28th of July, 23.90. The number of bars, it doesn't matter what the pattern is, but the number of bars should equal the same amount if there's a break of key support and it comes down towards 650. So I'll type it in here. This time I'm going to make it pink because it's coming down. Now remember, my normal thing in a situation like this is to say, no, I think it's going to be a little later than that, and I would choose this trough right here. So I'm just going to put it in as that's the way I would be planning it. But now let's do it based on what you just discussed. And I'm going to click it and take it all the way to the right. I don't know where it's going to land. I'm moving it over. There it is. Now I'm going to open this up and say, well, how about that? It's 4 weeks late, and it is close. The low this week has been $7.34, 70 cents above the low of January. And I have to say, is this going to be the one? Now, let me do it the way that I was saying to you is kind of what I would normally do. So I'm going to drag it across like this. I'm going to grab it right to the trough over there, and I'm going to click, make it pink, pink, and lo and behold, it's going to go out a little bit more, but that's the one that I'm a little bit more comfortable with. That is exactly what I would do. There are. So that's the one I would actually use. So I'm going to overlay it right here so that we're talking apples to apples. So this says that by the week of the 12th of April, within a week prior or to a week after, but somewhere in that range, there's a really good, it could be before, but that's what I'd be looking at, that there's a chance that that's really where it's going to. And the cup that I drew in before, which was failed, which is right here, I'm going to get rid of this ellipse on the right. It's called a quarto, a quarter of a semicircle. So that's gone, click, gone. And you've got the dreaded H, which says just even from the shorter term one, we've taken out the left side low. So all in all, what I'm looking at, regardless of what it is, what the name is, what the price is, whatever it is, what I'm looking at here is Envonix, ENVX is the stock we're looking at, silicon anode, lithium battery, 3D cell architect, just everything that you want to hear about in battery operation. And yet, look, it's gone from 23 down to the $7 level that it's at right now. It just hasn't helped. So the question should be, if it gives about, look, a little green candle today, it's up 12 cents at 7.88 when the general market is down. That's a good sign, but it's kind of got that stalling sideways action. So I don't know if you've done anything yet. The chances are, with a stochastic running into the 14% area after being at 7%, with a MACD histogram just a little bit better today than it was, that it could bounce a little bit. I just don't know if it's ready for prime time. I think your question is it ready for prime time? And my answer is, the way I'm looking at it, I think it needs a little more time. Whew, that was a long way of saying, I think it needs a little more time, Brent.
No, that's fine. I've done nothing so far. I just was looking at it, and I'd like that you define that further. And I'm just going to, like I try to always do, just be more patient and see if it can go back and test that low within the time frame you just mentioned.
And a lot of these battery companies have had the same kind of chart pattern. And it looks to me, and I'm getting notices here about cross sales. I never had that for a while, and now I've been getting it for a couple of months. I think there's a slowdown going on. So let's just watch it together, okay? Have a great weekend. Thank you so much.
Have a great weekend.
Thank you.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model? when you're already spending your energy looking for any possible trade opportunities. Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, we're back. So I needed to go through a couple of things, and the question came in, where would I add the SPY? Now I'm not sure if you're talking about the short side or the long side. For us, all our positions are in place. I don't want to mess around too much with them. I just, as I said, this is not the bearish kind of action that should be at this particular point. There should be Dow's now down only 54 points, S&P's down 18, a little bit worse than the Dow, but this should be way worse. So I'm impressed with what I'm looking at, because as I say, the question is Basil, is this a rig a buy? Yeah, I'll get to that in a moment. So look, NVIDIA is up 13 at 892.40, walking that 9-period moving average. So until we really see those nines cross negative, and that could take a little while because they are so strong, I don't think that you can just make a blanket statement about this is it. Now we're going down and it's all over. No, there's a rotation going on, and the rotation includes stocks like Microsoft that have done really well. While the market was pulling back today, it's pulled back a little bit, down 6 at 418.34. And Apple is on the way down. It's been tough for Apple. Yeah, 169 was a round number low recently. Then it ran all the way to 174. It's a nice 5-point gain, and now it's back to 170.82. Weekly chart looks terrible. This is a rotational market, so rig is a question. And I said to subscribers, rig is on our list as a buy. I've said it for a few days. Meantime, it's gone from the 540s to where it is right now at 576, acting very nicely. It's just about to hit the resistance in the 200-period moving average. So, Peaky, you're a long-term buyer. So I'm going to suggest, I like the way that, I'm not sure that I like it for the gas pump, but I like the way that the crude oil has rallied off the 200-period moving average. It's acting quite nicely here. It's already got to a leg D in the weekly chart, way under the major peak D that was up in the 94 area back in, I think it was October, and went to the 200-period moving average. So it's really been a struggle. It's not fantastic, but it's acted quite well. So I'm going to suggest for you, yes, I would start a position. This is on a short-term basis. I'm actually waiting. I need a little more evidence about rig looking out intermediate term, but on a short-term basis, in a leg E, it's a little bit extended, but the stochastic's flat at 577. I would start. I've been long rig for a couple of weeks. Yes, flat. Yeah, congratulations. That's been a fantastic position. So if you've been long for a couple of weeks, that's completely different to getting in right now. I like it. but it's not an ideal place to get in. But in your case, because you're looking longer term, let's start your position at 577. If it pulls back to between 550 and 540, give me a yell. We'll look at it together, because that's where I actually personally would like to be looking at it. So with that said, what are we looking at? Two things. I'm looking at time and price. I know I'm looking at our time together here. So let me just do this one more time, because it's going to be, I think it's going to be a really important moment on Tuesday for my webinar. There's an opening call, subscriber webinar. You can become a subscriber. Go to the front page of TFNN, check it out. And, you know, I've got so many webinars. I'm going to be discussing things. What I'm trying to do, usually I have this 64 slide, whatever it is. I'm actually hoping to have much less, but to put into practice. I want to talk about, just like I did today and I've been doing the last few days, I want to talk about the daily, weekly, monthly charts. I want to look at them in the different, look at this as rig in the background here. See how strong that 9 period over the 14 is? You see the MACD, how strong the 9 period differential, that's different, it's made up differently to the 26 longer term red moving average. You see the histogram, the little vertical lines, look at that, so strong. On balance volume, oops, I'm talking about on balance volume there. It's not even overbought yet, it's looking good. Stochastic's flat, and that's in the 90%, I think, area. And the relative strength, look, the RSI is at new recovery highs. I like that. That's a really nice situation. So yes, that's what I'll be doing. And then I'll say, hey, that's the daily, but what about the weekly? What are we looking at? Well, don't mess around there. Okay, get it back all right there. There it is. Now, a little bit lower. So look at the weekly. Well, the weekly is, I mean, there's nothing to see here, right? Just a nice blip to the upside. No, there's more than a blip, because now you've got the chance that next week the MACD for the first time can cross positive. That's what you want to see. You want to see a sharp move up with the stochastic going from under 20% to over 20%. It's at 25% right now. Strong V-shaped bottom, exactly. If it's in sync, that's fantastic. Look right here. On balance volume, look at that V-shape, the exact, no, missed it by a week, but it's still positive. And the 9 period moving average needs a lot of work. So this is a work in progress, the weekly. If this is going to be a longer term move for rig, by the time the pink 9 period moving average crosses the 14, it'll be almost above the 200 period moving average. You should see this in the 680, 720 area if this is going to be a long-term buy and hold. But look at this sharp move down for offshore drilling, transocean, oil and gas, pulling back from 888 down to the most recent lows of the in the 440s or 450 area. Yeah, this is either the start of something big, or at worst to go sideways. So yes, I do like it. I mean, MRO, one that we had a long time ago, MRO is Marathon Oil. Now, look at that. That's a nice break to the upside. So each one's doing something a little different, because Marathon Oil Core and rig, which is in a different area. So rig is right there. So this is Transocean Limited. So this does offshore drilling, oil and gas. And MRO is a little bit more, it's a little different. Let me actually do that for you right now. Marathon Oil. Marathon Oil does. What do they do? They are, it's descendant companies there. Marathon Oil Corporation, headquartered in Houston, Texas, engaged in the exploration and production of crude oil, natural gas, and oil sands. Marathon Petroleum Corporation, headquartered in Findlay, Ohio. Engaged in the refining and distribution of automotive fuel engines. So, yeah, they kind of do the same sort of thing, except this is as an offshore driller, Transocean. So it's a little bit different. Maybe it's lagging. Maybe it's a lagging indicator. So the Dow's now down 54, S&P's down 14. A very nice comeback. So within the context of what we're looking at here, let me just do this because the question came in. Where was it? Yeah, has the VIX pulled back yet? the VIX index trading at, it's pulled back now. It's only up 4 cents. It was up 54, you remember? So that says to me that the volatility index, I think, is a tool. I actually like it best when it's giving me clues that I use, like I did today. I said, if it goes back, where will the Dow be? Where will the market be? So it's pulled back a lot. I mean, it's gone from 1504 to 1446. That's a big percentage pullback. And the market itself has gone from the Dow down about 30-something, Dow down 57. Yeah, let's see. I'll be back in a moment. I'm going to talk about Duncan. I always say Duncan, but it's not as strong.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com. Educating investors. Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Don't Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi, folks. I Dan want you to know that Dan about TGB, which is Seiko Myers. I was discussing this the other day. I said it's in leg C. The shoe goes to a D. That's what happens in a bicycle to bimodal, especially when you've had, oh, this is a good one, TGB. I must put it in here, TGB, and this is a restart. A good example of restart. Yeah, so this is now gone to leg D. Very nice move up at 194, up 7 cents to Seiko Myers, TGB. And leg D in the weekly chart, and the monthly finally has gone above the inside track repellent zone. I'll be talking about all these things in my webinar coming up on Tuesday. What I also wanted to say is, so this is the 200 period moving average. We're watching this closely. Is this going to be the repellent zone right here at 52.01? You've come back very nicely, not from the high to the low, but really just in the 5-minute chart, you can see. So I'm just going to say right now, a close on a 10-minute basis about 52.10 in the E-mini would be very positive. If there's a repellence right here, and all of a sudden you're trading under 4, that's going to say, whoops, what's the close? So have a wonderful rest of the day, and thank you for Steve Rhodes and all the other great programming. And check out my opening call.